Hi everyone, I'm Sisi Ma, Managing Director of Grow and Sell Your Biz and the host of the Capital Raising Show. My hope is that by showcasing successful capital raises, you will understand how and where to raise capital and avoid making the same mistakes others have. We are very lucky to have here on the show today entrepreneur, real estate and stock investor, and business coach, Jonathan Wright. He's from Canada. Jonathan, thanks so much for coming on to the Capital Raising Show. How are you?
I'm doing very well, thanks. Yourself?
That's great. Thank you. I'm pretty good. So first up, I imagine you would have done this numerous times, but what is your 30-second intro about your business?
We're essentially a real estate investment company operating mostly throughout Atlantic Canada, focusing on buying multi-unit residential properties and partnerships with people who bring their investment capital into our business. What we do is we generate great returns by force appreciating the property and bring the banks in to refinance the money out so that the investor capital gets fully returned to them, and then we continue to cash flow. So ultimately, in the long run, the investors are looking to get an infinite return on their investments.
Sounds great. Thank you for that. So how has COVID-19 impacted your business?
It's impacted us in a couple of different ways. It had essentially what we've had to do is we've had to adjust the way in which we bring opportunities into our business. So as soon as everything got locked down, we had a meeting with all of our team members, obviously through Zoom and phone calls, to sort of shift our strategy in order to adapt to the changing environment. And what it's done over the course of the first 4 to 5 weeks that COVID hit is it allowed us to take advantage of opportunities that we wouldn't have otherwise found. It forced us to adapt and forced us to explore different options that we may not have explored otherwise. So as a result of that, we've managed to essentially double or triple the rate at which opportunities into the business as a result of COVID. So ultimately, it actually helped our business as opposed to hindered it.
That is amazing. Yes, thank you. And I guess I heard before that real estate is a very much location-based business. So a lot of people are sort of hesitant to invest outside their own area. When they can't go and visit themselves. Do you think is there something that sort of impacted your business slightly, or did you find ways around it?
Well, I find ways around it by educating investors on how real estate investment works and the value of partnering with someone who has the boots on the ground in the environment that they're looking to invest. So if you're looking to build a partnership or just simply invest in a particular market, you want to make sure that you have a representative that you know well and you trust in that market that can oversee your real estate investment. Whether it's a capital improvement project, a flip project, a hold project, a new development, whatever it is, you want to make sure that your partner is physically there to provide you that comfort. And you're going to find that in the long run, it's going to be a lot less stressful to build a real estate portfolio with someone in that environment.
Yeah, that sounds good. It sort of applies in business as well, I believe. Wherever you want to expand to, you definitely need to find the right partners to go with you. Yes. And so I see that you're in front of the backdrop of where you are coming from. Do you want to give us a little bit of sort of background on where that is, and also the real estate experiences you've had in terms of developing and investing in that area?
Yeah, well, what you see behind me is the city of Halifax in Nova Scotia, Canada, which is where our company is based out of. But we operate throughout Atlantic Canada, so all 4 maritime provinces. When I first started real estate investing, I started looking out in my backyard first before I decided to expand. And I realized that there were a tremendous number of opportunities in this market. And the advantage that we've had in this market over other markets is that we're able to get properties at a very low price range. So for investors that want to start off with a much smaller range of capital, they're able to do it effectively in this market, whereas they can't in other markets. So for example, if someone wanted to start with a small amount, say $100,000 Canadian, I could buy a property, renovate it for less than $100,000 Canadian. Like for example, we bought a single family home last month for $36,500.
Wow.
So we're able to get properties, at that low amount So for investors that either have a lot of capital but want to start small to
Mm.
build a relationship with minimal risk, we're
Mm.
able to provide that service, which a
Mhm.
lot of other investors can't. And the other advantage with this market as well, that's particularly on the East Coast, is that we don't see the massive amounts of appreciation that you would see in cities like Toronto and Vancouver. It
Mhm.
stays relatively stable.
Mm.
So during the crisis of 2008, the property values never went down. They just basically stayed the same for about 18 months and started going up again. So
Mm.
no one lost money. So because it's a very safe investment and investors can start at a very low price point, it's very attractive to a very wide range of investors.
Right, right. So when you go and buy or do a multi so what did you call them, multi-residential, multi-unit
Yeah,
residential? What sort of
that's right, multi-unit residential.
yeah, what sort of range are we talking about? Are we talking about, 100 units or 10 units? What sort of range?
It varies. It varies. It can be any range. We can go as low as two. We can go as low as 200 units. It really depends on, the investor's preference, what the opportunities are.
Mhm.
But I would say that, especially post-COVID, the opportunities are best in the small to medium-sized multi-unit buildings,
Okay.
because people are trying to move away from being in large multi-units where they
Right.
have to, have concerns over social distancing,
Yeah.
especially when riding elevators and things of that nature. So we
Mhm.
found a lot more success in smaller multi-unit buildings, usually in a range of anywhere from 2 to about 18 units.
Okay. Wow. What's so you're saying that a single house, a single house could be like 35,000. What would the price range be for an 18 unit building, for example?
Mm, it varies on the market. It varies on the opportunity. Again, the house that we got for 36,000 was an exception. I mean, these deals don't come around every day.
Yeah.
Typically, these houses would not be any less than 100 to 150,000.
I,
But for a multi-unit building, for an 18 unit, we've got it. Just looking at my board here, we're able to pick it up for about 460,000.
wow.
Yeah.
460,000 for 18 units. Wow, that is
Yeah. So
amazing.
typically so the strategy is to pick up a building that is not in perfect condition. I mean, if it's absolutely perfect, you're going to be paying full price for it.
Yeah.
So from an investment point of view, it may not be the best option. So
Hmm.
what we do is we get a property that needs improvement. So we pick it up for, let's say, 460,000. We
Hmm.
put another, let's say 100,000, $150,000 worth of work into it,
Hmm.
and then it gets reappraised at 700,000 or 800,000. The
Hmm.
bank comes in to refinance, and the
Hmm.
investor gets 100% of their capital back, and then we just sit on the cash flow.
Right. So it's a long-term investment strategy rather than a flip,
Correct.
sort of, what do they call, repair and flip? Buy and
Yeah,
flip?
fix and flip.
Fix.
Yeah, fix and flip.
Yeah, yeah.
Yeah.
So do you do any of the fix and flip as well, or is it mostly long-term?
Oh, absolutely, absolutely. If the opportunity is there, we'll take advantage of a strategy. I mean, buy, rent, and hold is our main focus because of the way the market works out here. But flip opportunities are definitely there, and we've done quite a few of those. Lease options or rent to owns are also an option.
Hmm.
Mobile home parks are an option. Land deals. I mean, again, there's so many different things you can do out here, and it's
Mm,
like just about any market. There's every strategy you can take advantage of, but
mm,
this particular market tends to be more advantageous to go with the long-term hold strategy, which is a strategy many investors use out here.
right. Do you find are your investors mostly local or are they international?
International. In fact, the majority are international.
Okay. Where are they coming from mostly?
We have investors out of Hong Kong. A gentleman that you've interviewed previously was one of them.
That's right.
Um, we have investors out of Germany. We have investors out of South Africa, United States, on
Hmm.
the opposite coast of Canada. I mean, it stretches worldwide.
Right. Yep. That's great. I mean, I guess a good opportunity is a good opportunity, right?
Exactly.
Capital is so mobile now. Anyone can invest anywhere if they like. Yeah. Are there any tax
Correct.
benefits for investing in Canada right now?
Tax benefits?
Yeah. And then yeah.
Um, Well, the advantage with the strategy that we're using is when we refinance the properties, often we're able to get more than the money we put in. So that extra funding that we get that stays within a company is actually tax deferred money because
Oh,
that ultimately came from a mortgage, is not considered income.
right.
So we have that advantage to build capital within the business.
Mm,
Um, and depending on the real estate investment strategy and how we decide to pull funds out of the company, there are different strategies you can use and different advantages on from a tax perspective. But again, every case is unique, every investor is unique.
Mm-hmm.
So it depends on their personal tax situation, depends on
Mm-hmm.
what other businesses they have in Canada that might impact their tax rates and so on. So
Yeah.
it's hard to say like a blanket benefit that reaches everyone because everyone is slightly different. Yeah.
Yeah, understand. I mean, in Australia, there are actually disincentives for overseas investors to come in. So for real estate, I don't know if you're aware of that. There are
Yes.
interest rates, for example, transfer rates. Is that the case in Canada, or you sort of welcome?
Well, in Canada, it varies from one market to another. So if you're trying to invest, say, in Vancouver, which
Mm-hmm.
is a very popular place to invest for foreign investors, now there are a lot of additional fees that go into that to try and calm that down.
Yeah.
But Atlantic Canada wasn't hit as hard with foreign investment in the past. So as of right now, no, there aren't. But I mean, things can change anytime, right? So the tax rules today may be different tomorrow. So
Exactly.
I wouldn't say that it's always going to be the case, but as of today, no, there are no penalties for foreign investors out here.
Sounds good. Sounds good. So in terms of the investors, what's the amount that they typically invest with you? Is it 100,000, 200, a million, or something like that? What's the typical envelope?
It varies from one investor to the other, but I would say that the majority of them are in the $250 to $750,000 range,
Mm-hmm.
and then occasionally they go up to the several $1,000,000 depending on the scale of how fast we want to grow, what kind of properties we get.
Mm-hmm.
If we pick up a few 20-unit buildings, that scales up very, very quickly.
Mm-hmm.
Whereas if we're buying a whole bunch of, like I said, $36,000 houses, you can buy 5 houses, and you're not sitting on a whole lot of money right now, right? So
Yeah.
again, it depends significantly from one investor to the other.
Mm-hmm. And I guess you just build the portfolio, build the business up as you go and as you identify new opportunities. Do you
Right.
work in like a real estate fund at all, or is it more a case by case?
No, it's a case by case right now. Right now, we're focusing on building the individual partnerships with different investors.
Mm-hmm.
Down the road, we might start looking at doing a real estate fund, but at this point, we're more interested in scaling up the existing businesses and building up that portfolio and the net worth of ourselves and our investors up to the point where we're achieving the goals that they want to achieve. And then once we get to that point, we can look at expanding to the next level.
Right.
Absolutely.
Sounds good. I found that some, like there are certain kind of professions that likes to invest in real estate as well, like dentists, lawyers, accountants, etc. Have you found that to be the case in your investor space?
Oh, absolutely. I don't think I've ever spent any time in the dentist chair without my dentist asking me one question after another about real estate. Um, it's very hard for me to talk about real estate when I've got hands and fingers in my mouth. It's very challenging. Um, but yes, it does happen a lot.
Yeah.
Real estate investors, I'd say, yeah, those that are the most interested would be the dentists and the lawyers, from my experience.
Yeah.
Yeah.
That's good. So what's the largest sort of development that you've ever done in sizes or dollar values?
In size, well, size and dollar value would probably be the same one. Would be a 36-unit building that we got at West. That was fairly early on that we ended up, offloading because we got a great offer on the property not long after we got it. So it was a quick turnaround profit. But that particular one there, we picked up for $890,000, I believe it was. So that was our largest single purchase.
Yeah. Okay, right. Yeah, well, that's good. Do you have any sort of, apart from the single individual investors, do you actually have investors like family offices or sort of institutional investors looking to basically say, you go and spend this much money for me to to build or to buy properties at the moment?
We've done that once in the past. The cost of lending was a little bit high with this particular group, so we didn't go back to them for that reason. But yes, we have done it. So I mean, if the cost of lending is reasonable and access to funds is reasonable, then yeah, absolutely, we're definitely open to it. But mostly we've gone initially more with private lending, and eventually we transitioned almost entirely into partnerships just because the benefits are much greater for the partners, and the access to funds makes it a lot easier to close deals very quickly.
Yeah. So how quickly can you close the deal?
The quickest I've done is 3 days.
Wow.
Yeah, the lawyers don't like 3 days. That's the biggest objection is the lawyers.
Yeah.
Yeah.
Wow. How can you, oh no, there will be unconditional, it will be conditional, right? Conditional close, because you've got to go through the whole registration process. It takes time, right?
It does. Now, our legal teams are used to working with us, so on occasion, they don't mind rushing a deal for us, but generally speaking, we don't like to do that. But yeah, in order to be able to close that quickly, everything has to line up perfectly. So, for example, if there's a lot of communication back and forth with the other party's lawyer and the other party's lawyer is slow to respond, it's really hard to do. So you need two lawyers working very well together back and forth to be able to make that happen.
Yeah.
But generally, we don't like to do that. We try and stick to at least 2 weeks or more.
Yeah. But I mean, I heard that in the U.S. Was it in the U.S. Some like the longest time that they have to spend is in the government office, the titles office or whatever, to get that transferred. Is that the case in Canada, or things move a lot quicker there?
It's a lot quicker because a lot of things are done by phone or online.
Oh,
Because
right.
my lawyer does the whole process to close a property, he never leaves his office.
Oh, wow.
So everything is done remotely. So it's very, very quick. We never had any issues with having to physically go into a government office. I don't think I've ever had to do that.
Wow.
Yeah.
That is amazing. Yeah. So Canada is a lot more advanced in that respect. So
in that respect, yes.
Yes. Yes.
Not in all areas, but I'll give Canada a point on that one. Yeah.
Yes. So as you say, you sort of invest in it, get the money out, but you still keep on holding the investment property. Then it becomes I guess what is it? Passive income for the investors, right?
Yes.
Yeah. And do you actually manage that property as well, property management, or is that?
I don't manage it personally, but I manage our property management teams. Yes.
Yes.
So we do put property management in place, and I just coordinate the management.
Yeah, that sounds good. So you have some professionals looking after the property management, because that could be a bit of a headache as well sometimes.
Well, it is. I mean, it's not feasible for me to do that personally, because with the scale that we're growing and the number of properties we have, I can't be called 100 times overnight to fix something or let someone in a building or whatever the case may be. So we had the managers handling the day-to-day stuff, going to the properties on a regular basis, and then I usually put personal eyes on the properties regularly every 2 to 3 months.
Right. You actually go and visit them?
Absolutely.
Wow.
Yep. Just like today, for example, when I went to look at some properties, I stopped by and looked at a few of the properties that we own just to make sure everything looks good. Again, that's part of having your investment partner in the market, because they can be eyes on the property. Also, when you call them and say, "How's everything going?" It feels a lot better when they say, "Yes, I was there yesterday. Everything is good to go. The building is still there." So it provides a bit more of a comfort feeling, right? So as opposed to you investing on the opposite side of the world and you cross your fingers hoping, oh, I hope it's still there tomorrow. It feels a lot better to have someone in the market.
There's FaceTime, there's Zoom, there's other technologies you can do a live and then share them, have them look at it. Yeah, but I guess nothing compares to the physical, there and there, the physical visit, definitely. Yeah. But,
correct.
Yeah. So how many units do you have at the moment? Like in round one?
Well, we've closed a total of 49 deals. We're closing number 50 on the 11th of September.
Wow.
So yeah, they turn around pretty quick. Right now, we're closing about 5 to 6 deals a month.
Wow, that's amazing. Yeah. So sounds like COVID didn't really impact you negatively, and it's it's helping your business, and so that sounds
not at all.
No, that's great. So do you have any I guess sort of pitfalls that you can recommend to people who wants to invest in real estate, or people who are raising capital for real estate investment? Do you have any suggestions or experiences that you think, oh yeah, you know, this is a mistake that I made. I hope somebody else didn't.
Initially, we focused on building. Again, it's all about building your team and having the experts around you. Because at the end of the day, to be an expert real estate investor, you're relying mostly on the expertise of the people around you. You know,
Mm-hmm.
you want to have a good lawyer, a good appraiser, good property inspector, good contractor, so on and so forth.
Yeah.
But we focus so much on building the team and here, you know, in Atlantic, Canada, to actually uh, manage the properties and ensure that the business would run smoothly. But we didn't focus as much on the lending side. So initially, we focused entirely on going through brokers and private lenders. And the challenge there is that it made the whole financing process very cumbersome. It was very difficult.
Yeah.
Even the lawyers were, you know, were telling me, yeah, we closed it, but it was a nightmare to get there. You know, with constant back and forth and different technicalities and lenders, you know, saying, oh, you know, I want to see this, and then 2 weeks later, oh, I want to see this. Then now we need to extend the closing date, and
Mm.
it makes the whole process a lot more difficult.
Mm.
So what I would recommend to investors is not only build your team on the ground around you, but also do a significant amount of networking to start building your capital partner
Mm-hmm.
on.
Yeah.
Because once you build these partnerships, it's a lot quicker to be able to turn around and close deals. And your lawyers are going to love you for it, and it's going to cut down your legal costs, and it's going to make it so much easier for you to build up this pace. And that's the only reason why we're able to close as fast as we do, is because of partnerships.
Mm.
If we were reaching out with private lenders, for me to reach out to, you know, different private lenders at 5 deals a month, I wouldn't even have time for this call. I'd be on the phone constantly fighting, trying to get the deals to work.
Yeah.
So it makes real estate investing a lot more effective.
Mm.
So, you know, the way to look at it is, sure, you can go with the private lenders, and you end up with a bigger chunk of the deal for yourself at the end.
Mm-hmm.
But, you know, the saying goes, you know, do you want an entire grape for yourself, or do you want half a watermelon?
Mm-hmm.
We
Yeah.
chose half the watermelon
Yeah. Yeah.
partnerships, and it
That,
makes a lot more sense. And
mhm.
real estate investing, it's so much easier through the partnerships for that reason. So
Yeah.
that's what I would recommend. Don't
Mm-hmm.
forget the capital partners and start early.
Right. Really good. Good. Really great advice. Thank you for that. Thank you very much, Jonathan. It was great
No
advice.
problem.
Yes, thank you so much for your insights today, and you provided enormous value for our listeners. Thank you so much for listening. If you want to hear more about this and other topics, please visit my website. As Richard Branson said, learn to raise capital by any means necessary. Tune in again on the capital raising show for the next successful capital raise experience. Thank you again for listening. All right.